Dumelang. We have done example one, we have done example two, and I gave you classwork one and two so far. That's what we have done. Now, from classwork three onwards, that's where I normally take questions from past papers just to check if students can be able to answer the past paper based on what they have learned thus far. And I feel like three activities are enough for a student to gain the knowledge that is required to answer the question paper. But you should have listened carefully. Now, we've got Cindy's Boutique. It is owned by Cindy. It sells upmarket luxury clothing. Their sales have been on a downward spiral since March 2020 due to economic decline. And Cindy's Boutique, we've been given the projected income statement for the month of January. We've got sales there. And note that with your projected income statement, it's the same as your income statement, except that it is projected and it's monthly. It does not record anything that is not an expense or anything that is not an income. Unlike your cash budget that records everything that is cash, everything that is cash payment or cash receipt. They are not the same. Okay. And that's why in your cash budget, you can find the purchase of shares, but purchase of shares, you can't record them in your projected income statement because projected income statement, it is the same as the normal income statement, except that it's monthly and you only record expenses that are incurred and income that was earned, not expenses that were paid or income that was received. I recently watched a mini discussion or documentary. It was held by Psych where they were talking about accrual basis, that most companies do not apply accrual basis. And accrual basis, it is the most important method of making sure that financial statements correctly reflect the financial or the profit or loss of the business and the financial position of the business. And that's what your projected income statement is prepared based on. It is prepared based on accrual basis. Moving right along, I'm just going to move into, I'm just going to go to the answer book just to check what is required. So I have been asked to complete this debtors collection schedule. And remember, to prepare your debtors collection schedule, you just need credit sales and the percentage of credit sales and when percentage will be paid or received by the business. That's all you need. Now, I noticed that I do not have November credit sales, but I've got collections from November credit sales, which amount to 177,840. Now, I need to check what month, after how many months did I collect that 177,840? And for me to be able to figure out what percentage that will be, I needed to get this information here, which says that 80% of their sales are on credit. Highlighted. Actually, I hope you highlighted it before watching this video. 80% of their sales are on credit. Perfect. And their projected debtors collection is as follows. 5% is collected in the month after the sale. So for November credit sales, 5% will have been collected in December. And 10% will have been collected in January. And 60% of those November sales will be collected in February, which is that 177,000. 177,840. So that is the 60%. It represents the 60% that was collected in November. Now, just to get your total credit sales, you could just take that 177,000 and divide it by 60%, or just multiply by 100 and divide it by 60%. Or you could have done this. I used this method, but you could have just used what I've just told you right now. I said my credit sales is X. When I multiply it by 60%, it should give me that 177,840. You divide both sides. You did this in grade 8. You divide both sides by 60%, it'll give you X. X will be 296,400, which represents your credit sales. Done with that. Now, when it comes to January, I don't have credit sales. I don't have collection. I mean, I don't even have the 5% that was collected in February, which represents a problem, right? I don't have, when I look at my question paper, I really don't have information here that can help me out. So I had no other choice but to look at my projected income statement, because this is all about sales. I've got sales there, and projected income statement only records total sales, both credit and cash sales. And I've got both of them will be 343,900. Remember, the projected income statement is the same as a normal income statement, or I don't know why they still call it income statement. But anyway, it is like a normal statement of profit or loss where it is prepared on accrual basis. I recently watched a show or a discussion, sort of like documentary. It was held by SICA, South African Institute of Chartered Accountants, and they were talking about applying the accrual basis. It looks like a lot of businesses don't apply the accrual basis. And somehow people that are running these businesses, like we can go back to Steinhoff, where we have Marcus Houston, who is a qualified chartered accountant, they can easily cheat because they know how these financial statements are prepared. And one of the things that they were emphasizing there is that your financial statements, I don't know why they raise it, but I'm guessing that they realize that a lot of financial statements are not prepared on accrual basis. And you need to differentiate between the projected income statement, which is a statement of profit or loss. It only records income that was earned and expenses that were incurred, while else your cash budget records everything that is cash. You cannot record shares here, but you can record shares if you issued shares. It's income, it will be recorded under receipts in the cash budget, but you can't record it in the projected income statement. And that's where you need to differentiate between the two. The projected income statement is the estimated or the projected statement of profit or loss. It predicts how your statement of profit or loss will look like. I remember I had one of my former students, Tabang, who is running a restaurant in Davidton, and he wanted to know, do I need to prepare the income statement every month? And I said, yes, you need to, because you need to know how much income you have earned in that specific month and how much you had as your expenses or costs or losses for that month. So you prepared monthly, and you can actually start preparing a projected income statement if you've been running your business for more than 6 months, because you can tell how much your sales will amount to the following month. You can easily predict. And when you don't meet your targets, you can actually see from the pattern if at the end of the year you will incur a loss or a profit. Similarly with your cash budget is just an estimate of your cash flow statement, and it's prepared according to a specified period. All right, here it's just for 1 month, which is for February. And I'm just going to take my total sales, which is that 343,900. And get the credit sales for that. So credit sales for January, I can easily calculate it, which is the 80% of your total sales. And that 80% will be my credit sales, and I can complete this by just recording it there as credit sales for January. How much of those January credit sales were collected in February? only 5% of that. So I'll just multiply it by 5% and to get how much I collected in February, then calculate my collection from debtors for February. And obviously, once you have calculated that, you can put it in your cash budget as collection from debtors. Done. Easy, right? We're done with it. Now, I'm just going to do this point from one point to the next. I'll focus on, I've done point number 2. Now I'm on point number 3, where they say that Cindy is planning on increasing boutiques markup from 90% to 110% on 1 February 2022. Now that will affect my cash purchases. That will affect my cash purchases, but I still need more information. They said the owner of the shop's premises rented out to Cindy's boutique has asked if she can take some dresses at a selling price of 13,650. All right. In February, and the cost price of those dresses will be 6,500. So that affects our purchases as well, but we'll get to it. The selling price will be deducted from rent that needs to be paid in February. And this is where I emphasize, we did this year with my students not long ago, grade 12s. We had something like this where they said that one of the directors took, excuse me, one of the directors took stock and donated that stock, I think. And the director said that that donation, which was around 7,000, must be taken from the director's fees. Now, when students read this, they have a tendency of thinking that that will reduce your director's fees. Similarly here, this does not reduce your rent expense. That is why your rent expense will not be reduced for that February. It will not be reduced. It'll still be that rent expense. However, it reduces the cash amount that you need to pay as rent. It doesn't reduce. So in our projected income statement for February, we'll have the full rent expense. And according to this, they didn't say anything about rent expense increases or decreasing. According to this, our rent expense for February will still be this 62,700. It will not change. In the projected income statement, it will not change. However, in the cash budget, it will affect how much we pay for rent in February. We are going to pay 62,700 less what the owner took from the business, which is that 13,615. The owner, the rent will decrease by the selling price of goods that were sold to the landlord, which is the owner of the premises. It reduces what we expect to pay in February. All right. That is why when I record that, I will record it as rent expense paid. It will be that 62,700 minus the selling price of the clothes that the landlord took from Cindy Boutique, which is 13,650. So that's what we expect to pay for rent expense in February, right? Obviously, you have noticed that this is for February. Okay. Done with it. All right. That was by accident, by the way, because I knew that it will affect our purchases, because that's why I highlighted that 6,500, because that affects our purchases. That was purchased. And cost of sales affects purchases because they told you that Cindy Boutique maintains a fixed level of inventory, which is a fixed stock base. Okay, guys, that's why I emphasize theory, understanding the basics. In all my videos, you will note that I emphasize understanding the basics. Once you understand the basics, you can answer any question. Okay, number 5 says 60% of stock purchases are for cash and 40% are on credit. Whew. Okay. They didn't say anything about credit, how we pay our creditors, so we cannot rely on that. And we don't know how much of our, well, let me see actually in my cash budget. Were we given payments to creditors? Yes, it was given to us. It's 74,100. But this could have been payments from previous months. We don't know how we pay our creditors here. So I can't rely on that 74,100. Basically, I can't just take that 74,100 and start dividing it by 40 to get my total purchases. I can't do that because that 74,100 could have been purchases of stock that were made 3 months ago. It might be that we pay our creditors after 3 months. So I can't rely on that. However, I need my cash purchases there. I cannot rely on the 74,100 because I'm not given any conditions of how that payment was made. We don't know, obviously, the fact that it was paid now, there's no way that it will help us calculate our cash purchases for this month. Because credit purchases for this month, well, parts of it could be paid this month. We don't know what the conditions are, as I've said. But we cannot assume that that 74,100 represents all credit purchases. Then why did we have credit purchases in the first place if you're going to buy them on credit this month and pay all of them this month? So it cannot help us, and we are not given any information about payments to creditors, so we cannot rely on that 74,100. Can I rely on sales that we had in January? No, I can't rely on that. Those were January sales, and they didn't tell us how sales will increase, only spoke about the markup. I can't rely on that. But one thing that I see here is my cash sales. You see, now that will help me. That will help me. Why am I saying this will help me? Remember what we discussed earlier on. I said when you calculate cost of sales, make sure that you have your total sales for that month. So I'm going to use my cash sales because I know that is 20%. It means that since it's 20%, I can multiply that by 100 and divide it by 20 to get my total cost of sales. And once I get my total cost of sales, I know that of the cost of sales, 60% of those will be cash. Cost of sales will be 265,020. I know that 60% of my cost of sales actually haven't calculated my cost of sales here. 60% of whatever I get as cost of sales will be my cash purchases. First of all, this 265,020 is my sales that I calculated by taking 53,004, multiplying it by 100 divided by 20, or giving my total sales for the month, which is 265,020. But of that total sales, to get cost of sales, I'll multiply it by 100, divided by 100 plus markup. Remember, I emphasized this in the previous videos. And I told you about my student that made a mistake of, I gave them a markup of 110 and they just divided by, they multiplied by 100 and divided by 110 when they were supposed to take 100 divided by 100 plus the markup. So they were supposed to divide by 100 and by 210. Now, I think it was 150 for them. Yes, but you understand what I'm trying to say. So this will give me my cost of sales. My cost of sales will amount to 126,200. This is cost of goods that I have sold. But there's a problem with that cost of sales. It excludes goods that were sold to the landlord. It excludes goods that were sold that we expect to sell to the landlord. So we need to get at the cost of goods that we expect to sell to the landlord, which was 6,500. Then this will give us our total cost of sales, which is equivalent to our, actually here, I made a bit of a mistake here. Okay, I didn't actually make a mistake. I didn't make a mistake. I thought I didn't multiply by 60%. I just realized now that I have it now. Okay, that will give me my total cost of sales for all sales, including the sales that were made to the landlord, which was 6,500. Remember, we spoke about it. Landlord, we sold some clothes to the landlord. worth 13,650 for 13,650, but the value of those clothes was 6,500. It's excluded from that 126,200. That's why we had to add it to get our total cost of sales. Once we get our total cost of sales, we are going to take our total cost of sales and multiply it by 60%. Total cost of sales equals to total purchases. So you're going to take your total purchases and multiply it by 60%, and that will give you your cash purchases for February. You can go ahead and replay that. Okay. And our cash purchases for February will be 79,620. Done. You first find your total sales. You were given cash sales. Use that to find your total sales, which is 100%. So you will multiply by 100, divide by 20. You will get your total sales worth 265,020. Then take your total sales, find cost of sales. You were given the markup, which was 110. So you multiply by 100 divided by 210 to get your cost of sales, which will be 126,200. But to that 126,200, it didn't include the cost of goods that we expect to sell to the landlord. And the cost of goods that we expect to sell to the landlord are worth 6,500. We bought these goods that we are selling to the landlord. We bought them. That's why we need to add it to get the total cost price of goods that we purchased. Total cost of sales is the same as total purchases, but only 60% of those total purchases will be cash. And that's why cash is paid immediately. Cash purchases for February will be recorded under payments, and we are going to record it as 79,620. Can I move on? Good. Let's move on. Let's go to the next point. It says the employee costs consist of gross salaries plus 1% UIF. So 100% of your gross salary, we're going to add 1% of that. Now it's at 101%, and then we're going to add 10% of that, and then we're going to add 20% of that. And all of these are just contributions. That's why we're adding them. If they were deductions, we are not going to add them, but they are contributions. They increase what we pay the employee. We pay the employee 100% gross salary, but then we needed to pay UIF, so we are adding 1%, so it's 110. Add 10% for pension, it's 111. At 20%, now it's at 130. So what we pay the employee will be 131%. Will be at 131%. It's 100% of the gross salary plus the percentages of the contributions. Okay. Basically, the only gross salary we've got is the one that was recorded in the projected income statement. And it's not just the gross salary. When they say employee cost, this is gross salary plus contributions. So that is at 131%. Okay. Now we need to figure out how much of that will be paid, because cash budget is all about what has been paid. But that was for Jan. We don't know what our employee cost will be for February. Let's read further. Cindy is planning to stop contributing. Oh, okay. Stop contributing pension. So Cindy will not contribute this amount. And medical aid. So Cindy is not expecting to contribute that amount, but this is only at the end of January. Okay. So that is the only thing that will change from the January employee cost to the February employee cost, is that in February, we need to exclude pension. We also need to exclude medical aid. That's easy then. We just want 101 out of 131. We've been given 131 for January because everything was included in the employee cost for January. So all we have to do is to work with that 55,020 and multiply it by 101 because we just need 100% of your gross of the employee gross salary plus the 1% of the UIF, and then we're going to divide by 131, which was given to us. Note that that 55 and 20, it was 131. It included all the contributions. So we multiply by what we want, we divide by what we have been given. We just want 100% of the gross salary plus the UIF, which was the 1%. And our employee cost for February will be 42,420. Interesting, don't you think? That was awesome. All right, let's move on. Next point, what does it say? Cindy's Boutique's other expenses for February consist of the following. We've got cash purchases of consumables. We've got depreciation. Oops, wait, I will not highlight it because that's not a cash expense. I'll go to the next one. Is stationery an expense? Yes, so those will be your cash expenses. So my other expenses or costs will be made up of only those two. I cannot add depreciation. You will add it in your projected income statement, but you cannot add it in your cash budget because depreciation is a non-cash item. It does not result in money going out. It's just a valuation expense, right? We good? Great. So my other expenses, I'm just going to take 4,000 and add it with 1,110. It'll give me 5,110. That's it. Okay, let's go. Next point. Cindy's Boutique has 3 cash registers. Cindy has decided that they can make do with 2 and has found a cash buyer for one of them. Now, that is key. Cash buyer, it means that we're receiving money now. She will sell it in February. So the now is the February. So we received money by selling this. We expect to receive money by selling this. The details of the cash register when she sells it in February will be as follows. So they gave us the cost price in February. They gave us accumulated depreciation in February. And they gave us profit on sale of this asset in February. Now, the fact that we made a profit, it means that we sold it at carrying value plus profit. So we expect to sell it at carrying value plus profit. So the selling price will be at carrying value plus profit. That's what it means. So the selling price, because normally profit is carrying value. Profit is selling price minus carrying value. So selling price minus carrying value is equal to profit. So you can write that as an equation, or you can just use what I just said to you. The fact that we are selling this at a profit, it means we sold it at carrying value plus profit. Selling price will be carrying value plus profit. Or you can just use the formula that I said earlier on and manipulate it if you're good in maths, okay? Or maths late, because you should be able to do that as well. So we don't have carrying value here, which is a problem, but you needed to know the method for finding the carrying value, which is cost minus accumulated depreciation. That will give you your carrying value, and then you just add your profit to it, and then it'll give you the selling price of that asset. Note that if we were preparing the statement of profit or loss, we will only take that 120 and put it under other operating income as profit on sale of asset. But here we're not preparing the projected statement of profit or loss. We are preparing the cash budget. We're only interested in the cash amount. And the cash amount we received was the carrying value, the selling price, which is the carrying value plus your profit. And meaning that we sold it for 2,890. So we can calculate our receipt. So 53,004 plus 241,696 plus 2,890 will give us our total receipts of 297,590. I'm left with something here. I don't know what it is, but let me just read further and see what it has for me, which is point number 9. Interest expense consists of interest on overdraft. Interest on overdraft. You only know about interest on overdraft. Guys, we did this from grade 9 already. Interest on overdraft is recorded in the cash payments journal. You will only know about interest on overdraft when you receive a bank statement from the bank. So it reduces money. What about this interest on loan? It can also reduce our money. It's a cash payout, but they will have to tell us when we pay it. Are we paying it monthly? So do we take that and divide it by 12? Or is that the monthly one? Is that only interest on loan for February? They need to give us more information. Let's read. The interest on the loan is capitalized. Oh, damn. When they say it's capitalized now, that is another problem. They'll just have to tell us the payments we made to the loan, which will include interest plus the capital portion. And that's a problem. And then they said a debit order of 23,000 goes off the bank account to pay off the loan every month. Oh, that's interesting. So that means that 23,000 already includes that. How much was it? That 9,405. Let's see. So we don't have to. Oh, there it is. Loan repayment. So that 23,000, that 9,000 400 and whatever, I forgot what it is. It isn't included in there. But the only one that was not included, it was interest on overdraft, which we will show it separately here. Because this definitely went out of our bank. It'll definitely go off our bank. And that's why we will put it there as 3,945. And then you just add all your payments and you will get payments amounting to 327,245. Now take your receipts minus your payments. It'll give you a surplus or deficit here. Your payments are more than your receipts, so it'll give you a deficit. And then your deficit, already we have a negative bank balance at the beginning, so you'll add the two, it'll still give you a more deficit, and which will be a negative value. So calculate it quickly there. How much do you get? You will get negative 229,980. That is a bank overdraft. It's a liability. I want you to pay attention to what I said. Okay. Now let's read the next question. What does solvency ratio of a business mean? Solvency simply determines the company's ability to pay long-term assets. Long-term liabilities using long-term assets. So this tells you whether you are qualifying to continue as a business or not. All right. If your total liabilities are more than your total assets, you need to close down and file for solvency. That's what it means. Okay. Calculated the expected solvency ratio of Cindy's boutique on the 28th of February. Now we need more information for that, but I know the formula. It's just this: total assets is to total liabilities. That's what the solvency ratio is. Already I know that I've got this liability here because it's a bank overdraft, but I need more information. And according to this, my assets will be 1,245,776, and my non-current liabilities will be 1,254,000. Now, if that was a positive bank balance, it would have been included there because they said it's a total assets. Okay, but it's not a positive bank balance. But since it's a negative bank balance, if they said this is trade and other payables, it would have been included in there. But they just said that is trade creditors. So it means that's only about creditors. So it was not included in there. And obviously it cannot be included in non-current liabilities because bank overdraft is a current liability. So my liabilities will be this plus trade creditors plus bank overdraft, that which is calculated. And this is what we will get. And then you will divide both sides by total liabilities. So you will divide both sides by 1,556,380. On the right-hand side, you'll be left with 1. On the left-hand side, you'll have 0.8, which means that your assets are less than your liabilities. So you need to file for solvency here. You're missing 20 cents. So for every 1 rand you owe, you can only pay 80 cents for it. So you're missing the other 20%. And I guess that's why they gave us this long paragraph here. They say Cindy is considering closing down, which is what she should be doing based on the solvency ratio, and filing for bankruptcy, which is insolvency. This means that the court will sell all her assets, business assets as well as personal assets, all right, to pay off her debts. She is considering starting a new online shop after that. Good. But with what? Because you've sold all your assets, your personal assets. So you going back home in this case. Um, Parents' house, that is, or your sister, or your cousin, or your brother, or your grandparents, because that is the risk of opening a business. Okay. But know that the higher the risk, the higher the return. Now, discuss one advantage and one disadvantage of keeping her shop open or declaring bankruptcy, closing it down and going online. So when she declares bankruptcy, everything will be taken, basically, including the personal assets. Because, I mean, Cindy Boutique, it's named after her. So there's a high chance that this business is actually a personal liability company. So whatever the business can't pay, your personal assets will be taken. That's what it means, right? Advise Cindy on what she should do and then explain the main reason for your advice. This is tricky. But the thing is, if you close down your business, you lose all your assets, you don't have money. So you'll have to wait a while to get money and then start online and the expenses to online. How do you buy stock? Already you were bankrupt, so your credit score is not that good, and you can't go down because of bankruptcy and take a loan thereafter, then you'll be very stupid. Okay. Um, so what advice do I have for it? Well, let's see. The advantage of keeping the shop open may not be the same reason given for disadvantage of closing the shop. So you can't say this is what will happen, and the disadvantage is that this will not happen. You can't say. So you need to give different reasons. You may not repeat your reasons. That's what they're basically saying. So this is what I started with. Okay, I said Cindy already has customers and reputation. She should reduce her cash outflow and increase cash inflows to reduce monthly bank overdraft. If she keeps on paying her debts, because she's already paying 23,000 and interest on overdraft, so she needs to just reduce her other expenses and maintain a positive cash flow. I mean, this economic conditions are seasonal, so conditions could have improved by this time and she could make more money and improve the solvency ratio. Do you get it? Because it's only for a specific period. Now, the disadvantage is that if it doesn't work, this will lead to more bank overdraft and more bank overdraft. And we notice that she has made a bank overdraft, right? Will result in Cindy losing all her assets. So basically, she was going to lose only 20% of her personal assets. But if she keeps on going deeper and deeper and deeper and deeper and deeper and deeper, her personal assets might not cover for the deeper expenses that she's going into or deeper debts that she's going into. So Cindy could be blacklisted. And when you're blacklisted, you lose all your personal assets and may not be enough to cover all your liabilities. Due to blacklisting, Cindy will struggle to start another business after closing down. That is a problem. I gave my personal opinions here. This could be different from what the memo said, okay? Um, this is because when I was this year, uh, I was selling cakes at school until I was stopped, obviously. Yeah, that was good because it was benefiting the kids. It gave me real examples to explain to the kids because it's happening, it's here. No, I remember showing them about cash sales because I will tell them that, oh, this packet is 10 rand. I'm giving it to you now. What am I getting right now? I'm getting the other 10 rand. So cash received immediately is immediate. However, if a debtor buys on credit, then we have to figure out how much will be collected and when. So that's where the student normally say, oh, I'll pay you on Monday or I'll pay you month end. So now cash is delayed. But in the meantime, I need to bake. And the money that I need to bake, where do I get it from when I sold goes to you on credit? So it gave students practical examples. And beside that, I'm a teacher. So I I look desperate, okay? Obviously, I'm desperate at that moment. I was trying to show them that it doesn't matter who you are. It doesn't matter about your financial background. but you need not be ashamed of starting a business. And I used to explain to them that students nowadays find it easy to hold each other in public, hold each other's hands in public, hug and kiss in public, and stand by the corners holding each other, hugging and kissing. But they will laugh at the person that stands at the corner and sells sweets, oranges, clothes, and other things. Between the two, what should actually be embarrassing? And that's what I was trying to teach my kids, that it is not embarrassing to sell. Because I don't want my kids to go out there to fight for job opportunities when there's so many people that are unemployed that have nothing. They have enough to start something of their own and employ those kids that cannot afford. Okay. Anyway, this is me just explaining. This comes from my personal opinion from running my own personal business, which is tutoring, providing extra lessons and online. And I know the struggles of providing lessons online where other clients don't want online lessons. Others think you'll rip them off after paying. You won't organize a lesson. That is the disadvantage of having online, but actual lessons, people know that they will come to your house. And then after that lesson, they will pay you. But with online as well, I can't teach you because I don't know you. So I need you to pay first before I can teach you. But now the student is also worried, what if I pay him and he doesn't teach me? Where will I find this person? Which is true. But that would be stupid because I have my YouTube. I mean, you will see this on YouTube. So basically, you can report me that I'm running an illegal thing, and yeah, and I stole your money and stuff, you know. So you can come up with such things, but obviously I'm not giving you ideas here. So online has its own advantages and disadvantages. So with online, I had to buy a mic, I had to buy a powerful gaming laptop so that it doesn't go, you know, it buffs most of the time. My previous laptop used to freeze and then I have to start recording again, only to find that it didn't save. And then I have to start from scratch. When you listen to the noise, there's echo. And that's why I had to buy a very expensive, it's Asus gaming tough laptop. And then I had to buy a screen. So all of those online, going online doesn't mean that you're not losing money. You're still losing money and it's a new environment. Your marketing is different. You can't have a billboard. You need to market differently. You need to have social medias, which is what I don't like. So marketing is different. It doesn't mean that you're saving costs. You're still incurring costs when you go online. I didn't need a tough gaming laptop when I was teaching a student. I just needed copies and that's it, and a whiteboard. But now when I teach online, I need different things. I need a very powerful laptop. Okay, because I don't want to have problems and stuff where I have to stop a lesson because my laptop is freezing, blah, 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 blah. You understand what I'm saying? So that's why I'm saying these are my personal opinions based on business that I'm currently running, because I also had to move from contact lessons to online lessons. But now, Cindy, if Cindy was to close down, declaring bankruptcy, and going online. And the advantage is that she will reach a lot of people and she can use, obviously, for now, she can only lose business assets on only 20 cents of her personal assets, which could be enough to cover her debts, you know. If Cindy starts from scratch, she could still use her current contacts to reach out to her current customers. Online trading will reduce some of the overheads like your rent. She might not need rent, you know. She might buy a cheaper house. Obviously, if she lost her house, she might buy a cheaper house and run the business from the garage, you know. Um, and that is the advantage. And the disadvantage of going online is that, as I've said, customers don't trust you. And when you run an online business, it'll be new to her and she may need some training. And for some of us, it was training on the go, and where you just have to ask people, what do you think is wrong with my videos? What do I need to correct? Stuff like that. I love paper too because, yeah, I just love paper too. It's such an awesome paper. Anyway, she may lose customers that do not like shopping online. As I told you, I lost some customers because they don't like me teaching them online. I don't know why. I have students like that want me to teach them in class, and they say that for online is different. But the thing is, for online, I'm just sitting next to the mic. I'm teaching exactly the same way as I will teach them in class. It's just that obviously in class, I crack jokes there and there. Um, but yeah, even here, I do crack jokes now and then. Um, if you do understand my jokes, because no one understands my jokes. Um, but that could be the problem. The disadvantage is that he may lose customers and she may need to buy more assets after losing her current assets. And note that she lost all assets and now you don't have money, and you have to start from scratch buying more assets, which is a problem. Because I told you that when I decided to go online, I had to buy a new laptop because it's not the same as teaching at school. At school, my laptop can freeze and I'll be able to continue on the whiteboard. But here, when it freezes, it means the recording is gone. So it can be 1 hour long recording, then I have to start from scratch. Do you understand that? So, what is my opinion here? Obviously, for me, what I noticed, this is my personal opinion. I don't think the markers will not give me marks, actually, from what I've just said. My personal opinion is that Cindy shouldn't close down, but she'll probably run the online store and the actual store concurrently because she can actually use some of the assets that she has at the moment to run the online store without losing them. And when you do go online, it exposes her to more customers that could increase cash, and that will be enough to cover for debts and monthly expenses. I mean, for now, she can already pay for some of the expenses, especially that result from liabilities. Okay, so she can do this concurrently because online trading exposes you to more customers that wouldn't even, if I have a shop in Mayerton, not everybody can make it in Mayerton, but if I have lessons online, I remember at some point I have two students I have taught so far. One was from Bryanston High, and the other one was from War School somewhere in Bumalanga. And I've never met them. It was what was their names? The other one was Kenzie, and I forgot the other one from Bryson. Actually, in Bryson, it was Rosie and Nokutenda. Yes, Bryanston High. Um, and the thing is, I don't know Nokutenda and I don't know um, Rosie, and I also don't know Kenzie from Bumalanga. And would I have taught those kids if I was still running one-on-one tutoring business? No, I wouldn't. So it exposes you to more students. I can teach someone from Cape Town while sitting here in Mayerton. Do you understand? So online trading just exposes you to more customers that wouldn't even come to your business, that wouldn't even know about your business. So once you're exposed to more customers, obviously your sales might increase, resulting in more receipts being more than your payments, and your business could expand and she could come back and still succeed, be able to settle the debts. One principle you can learn from this, and this is one advice I always tell my students: if you can, try to run your business using owner's equity capital contributions. Don't rely more on the banks. And think about it: when you take a loan from a bank, um, they will charge you around 20%. What did the bank do? You opened up your own business, you're running your own business, but someone is going to get 20% of your profits. You rather give it to your dad or your mom or your cousins. Um, but normally people will say, no, 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 no. I don't want to give it to you. This is my business, but they will rather give it to a stranger because immediately when you take a loan, you're giving it to a stranger, which is the bank. I hope I'm making sense. All right, there are other things you can ask your employees to contribute into your business. Probably if you pay them 10,000, ask them that, can you please just contribute 500 to the business, you will get a certain percentage of the business and you just give them that 20% ownership, okay, which motivates them to work harder rather than give that 20% to a bank. But the thing is, sometimes you need that bank financing to buy property and stuff, because interest rates on property is a bit small. But when it comes to vehicle financing and other loans, it's a bit too much. Okay. So be careful every time. Be money wise when you start your own business. Okay. I'm going to go on forever because my kids will always say, oh, Kalile. Oh, Kalile. Because, yeah, business is my passion, guys. Okay. Please try this one out. Try it out, try it out, try it out, try it out. There are certain things I might change. Okay, I didn't put in the question here. If you do have the 2020 IEB paper, you can check it in Google Classroom. Yeah, and try to do it on your own. Okay. Thank you. Thank you for listening to me, and I hope you enjoyed the lesson. Please don't forget to like and hit that notification button. Just take a screenshot of the video or the link, post it on your social media, Instagram, Twitter, TikTok, wherever, just to let everybody know that there's this cool accounting channel. Thank you for watching. Kgotso.